Welcome to the end of week macroeconomic wrap up. This is my second time recording this, so this time I have remembered to plug in the microphone, thankfully. Let's just jump straight in. Here we can see the Dallas Fed Manufacturing Index. It's holding pretty level. It's worth noting that Dallas has been in contraction since early 2022, and we can see that here. Nothing really exciting happening in America in regards to manufacturing. Services is more I forgot the word, the industry that you want to watch. That's the one. Tuesday, there's a little bit more going on. We've got the Red Book year over year here. It looks good over a longer time frame, so that's pretty nice to see. I always like to look at the big picture on these rather than just looking at the immediate comps. Obviously, if we look over the short term, it looks bad because it's dropped, which isn't the case as we've just seen. Consumer confidence here has ticked down a little bit from the previous read, but it's still holding pretty consistent levels, so there's not too much of a concern there. We are seeing other data pointing to some consumer issues, though. That's something to be aware of. Services and manufacturing, a bit of a mixed bag. Services, obviously more important to the US economy than manufacturing, so I would focus on those numbers. That said, the index is still in contraction over the broader time frame. The main thing on Tuesday that I was looking at was the money supply here. I've been talking this week about liquidity coming to the market, and we can see that actually happening with the M2 money supply increasing, which is nice. We are seeing short-term treasury issuance ticking up and less long-term, which does make me think cuts are coming sooner. Perhaps not July still, as that might be too soon given the data, unless PCE was amazing today, which probably won't happen. Hopefully it's lower still, but not like amazing. What else? Not too much on that day I'm concerned about. If we take a look more on Wednesday, we can see a lot more housing data. I'm not very interested in looking at the minute. I'm not expecting any big changes until their rate cuts. So I don't even really bother looking at that, to be honest. Don't think the market in general does either. Then we can go to Thursday. A lot of people were talking about the durable goods order, mainly. Not that it was a bit better here, but we saw a large revision from 0.7 to 0.2, which wasn't ideal. We don't like to see that number revised lower, especially if we look at the number we got on this reading. If that gets revised lower, that puts us in negative territory, which is bad news. GDP month over month is in here too as well, I think. Was it quarter over quarter? I think it's quarter over quarter. But yeah, we can see that sliding down. This is a worry mainly for us, but I think the Fed will actually like this coming down, as it's part of their mandate is for a strong economy and a strong jobs market, and we are seeing shaky footing in the market. The party could still go on. It's not really too much of a concern, but we are seeing some contraction coming, some tightening of the belts, and the consumer is starting to get a little bit exhausted. Obviously, we're seeing a lot in the news for the last year to 6 months that the consumer's in a bad place, but it takes a while for them to actually really stop spending and racking up credit. Next thing I wanted to talk about was corporate profits, if I can find it on here. I think it needs my eyes testing. Corporate profits are starting to come down. Obviously, we did have quite a big reading in the last quarter. I think this might actually come down again in the next quarter, seeing a lot of companies still revise their guidance down and being overly cautious. So that's something to keep an eye on. The jobs data, I'm still adamant it's all made up. It's pretty much flat, nothing too drastic happening here. I think the jobs numbers in reality are actually far worse than we're seeing. I think the last earnings season. Nearly every company I listened to the earnings call on were having considerable staff cuts, or at least freezing employment. That brings us to Friday, which is today. Unfortunately, I'm out on a long weekend away again, so I'll miss the PCE excitement. Do be careful. Anything flat or not flat or lower is going to be a bit of an issue for the market because they're probably going to throw their dummy out of the pram. I can bring up the CME probabilities here. Currently, the market's pricing in not likely a cut at the next meeting, but after that, very strong chance of it. Obviously, if we get bad PCE data here, that could change drastically, and that will need the market to reprice itself a little bit. Okay, let's take a quick look at what commodities are doing. I don't typically trade these, but it's important to take a look at them, see where the market's at. Gold and silver, not really that fussed about. I do like to track lithium though, because it's quite important to Tesla, which is one of my core positions. Year over year, it's great to see that being weak, and it's also started to come down again, which is nice to see. That's more savings for Tesla, more cogs to improve on. Quick look at food, agricultural. Cocoa still sky high, has started to fall quite substantially though. That's probably going to continue. Most of this is falling, or at least not gaining too much, which is nice to see. That's good news for inflation. Butter seems to be the one to watch out for. That seems to be want to move up though. What else do we have? Electricity. Spain is having a rough time, and Germany's not having a great time, but at least they're a lot better than Spain. In the UK, we're obviously seeing declining costs regarding electricity. Probably the big boys won't pass that cost saving on to us, but it's nice to see. At least they're getting more money. Freight as well is also important to look at. Last week I did mention that was moving up still. I'm pretty sure it will be again. Yep, this is not ideal. We don't want to see this get back here. This really can drive up inflation and cause bottlenecks in the network. There is a bit of chatter going around that this could be front running just in case, but hopefully it does peter over, so I'm keeping quite a close eye on this one. Something else I wanted to talk about was this. Hedge funds. Hedge funds are dumping tech, individual stocks of tech, not indexes. This is the biggest drop on record that I've been able to find. Now the market isn't falling, and that's because retail's been buying the dip up. It could be a little bit of FOMO. Everyone's a bit excited. No one really wants to go in the risky stocks at the moment, which is understandable. My portfolio is set up in a position to take advantage of that when it does happen. It doesn't necessarily mean anything bad is going to happen imminently, but it should make you a bit more cautious about entering these large caps at this stage, just in case retail are going to leave you bag holding. In case the hedge funds are going to leave you bag holding. If there's good earnings and if everything's hunky-dory and the economy's good and the money keeps coming, there is the probability, or well, the chance that hedge funds could come back and push the market even higher. So it's a bit of a way on your own risk tolerances there. Personally, I don't chase things at the top, so it's not something that really affects me. I've been mostly out of any stock making new highs for a while, just because that's not the part of the stock price move that I want to be part of. Let's see if there's any other news. Oh, I wanted to take a quick look at the dollar. You can see in this chart we are pushing up against this purple trend line. I don't really want to see a breakup of this. A strong dollar is not good. It's especially not good for the smaller businesses and international businesses, as it does make the market feel a bit like it doesn't want to be risk on. Obviously, Bitcoin is affected by that as well. So if this drops, likely a Bitcoin rally would happen. There's potential that this could drop with good PCE today as well. Ideally, I want it to get back down to this 100 range. But, it could go either way. It could break higher, it could break lower. We'll see. Look at oil. Pretty much the same situation. We're getting to an apex in this purple pattern here. We did break higher. There is a lot of resistance confluence here, which hopefully forces the price back down. Although it's probably going to be range bound and tick along here. I would ideally like to see this break back down into the low 70s. Same with Dixie. If oil goes up, things are going to struggle because there's a lot of inflation worries that come along with having expensive oil, which makes sense when you think about it. Okay, I think that's everything. I hope that was useful for someone, or at least one person. Enjoy your day.